Hey folks, it's Simon here with your Tau Daily video for Friday the 7th of June 2024. S&P was steady on Thursday, nominally made a new higher high and a new higher low. But, the technicals here continue to look bullish. All right, we're making higher highs and higher lows, but that's the very definition of an uptrend. One thing to bear in mind is the market has got a bad case of bad breath here. Bad breadth. What that means is even though the index looks strong, it is a narrow group of stocks leading the way higher. There are several ways we can track this. Okay, we can look at the advanced decline line. Now, there is a divergence here, however small, but the S&P has made a new all-time high, whereas breadth is not. Okay, the advanced decline line has made a lower high. So that's a bearish divergence. These can be significant. It doesn't mean the market has to fall, but big falls are often preceded by bearish divergences in breadth, and the classic example was here at the beginning of 2022 where the S&P made a new high and the advanced decline line made a lower high. So a little bit of a warning signal there. A couple of other things we can look at. Percentage of stocks trading above their 200-day moving average. 200-day moving average is the line in the sand between a long-term uptrend and a long-term downtrend. Now, we've still got more than 50% of stocks above their 200-day moving average, but you can see the percentage has plunged even as the S&P has made new all-time highs. The 50-day moving average, this is the line in the sand between a medium-term uptrend and a medium-term downtrend. Here, less than 50% of stocks are trading above their 50-day moving average, and you can see that the percentage, again, it's plunged even as the S&P has made new highs. Another sort of more obvious way of spotting these divergences is just comparing the S&P 500 market cap weighted index with the equally weighted version. All right, this is where all stocks in the S&P 500 are given an equal weighting. The S&P is at a new all-time high. The RSP, the equally weighted S&P 500, is still quite some way away from an all-time high. And of course, a lot of this is due to Nvidia, which has kind of dragged the market up this week. This stock has obviously been very, very strong. We get the stock split next week. I wouldn't be surprised if Nvidia has a little bit of a hangover once the stock split goes through. And of course, we've got non-farm payrolls today before market, and we've got the FOMC next week. So plenty of things that could shake the market up. Just a reminder, okay, poor breadth, it doesn't mean the market has to fall. But if the handful of stocks that are holding the market up do start to fall, that could spell trouble. And right now, Apple and Microsoft and Nvidia, those three stocks, account for about 20% of the S&P 500. And we've got Apple's Worldwide Developer Conference next week as well. That historically has been a bit of a buy the rumor, sell the news kind of event for that stock. So if we do see those three stocks, Apple, Nvidia, and Microsoft, roll over, that really could pose a pretty major headwind for the S&P. That's what I got for you. I hope it helps, and I hope you have a wonderful weekend.